The next section is adding at a tight area. Sometimes a stock will break out of a base, run up, and just hold in tight, and we won't get the exact 3 weeks tight that we're looking for, where each week closes almost unchanged or within that 1.5% tight trading range. But the formation itself is just very tight, but it's not really long enough to be a typical base, a flat base, or even a square box. But the action is tight and it's holding in those gains. And that's a place where you wouldn't really want to establish a position, but it's some place where you can be pyramiding into the stock. We're going to start off by looking at Walmart. This is something that's really helpful to focus on weekly charts. So we're going to start with a weekly chart on Walmart and look at this beautiful cup with handle that it breaks out of. Very constructive pattern. The only thing that's a little odd is the left side. It kind of spends a lot of time before it starts rolling down, shaping out kind of that scooping area. It's very predictable stock. Trades nicely, and you can see that with its history and its run up from $16 up to $29. Very orderly move. Then it comes down, getting some support in the 25 range, forms a nice little saucer with handle, runs up, forms another little base. So the stock likes to build bases within a general uptrend. That's an ideal stock. This stock was early on in its move. Not everyone was really aware of Walmart back in the late 70s because it was starting off in the middle of the country and kind of expanding out away from there. So let's focus in on this tight area. So after it broke out of that cup with handle, it just runs up for 1 week and then holds in 1, 2, 3 weeks in there. You can see that the closes are not tight enough to be that ideal 3 weeks tight, but that tight spreads are telling you that, you know what, people bought this at the $34 range and now it's up around the $38 range and they're not willing to sell their shares because it's not going lower. Every time it starts dipping a little bit, people are stepping up buying it. So if you bought 1,000 shares as it is breaking out of that cup with handle and you start recognizing this, as it starts moving into new high ground, you can add some shares, maybe 200-300 shares off of a formation like this, building that bigger position, making sure that you don't run your cost basis up too high. And now you've got a bigger position in what's potentially going to be a real winner for you. And you can see if you held on to that in a short period of time, it runs up to the mid $50 range. That's a big move in a retailer in a short period of time. So that was Walmart. The next one on adding out of a tight area is Biogen. And this is Biogen more recently. Biogen has had a tremendous history, lots of times where it was really a leading biotech, and then many times where it just sat out and was dead money for long periods of time. You can see that it broke out of this cup with handle, ran up for many weeks, held kind of tight there for a little bit, starts moving back up, and just after 1 week up off of that 10-week line, it's just holding in tight. So let's say you had bought some shares out of that nice forming cup with handle and you're holding it. It's really not making a ton of money for you, but it's not giving you any reason to sell. So you'd still be holding on. And just as it starts moving up higher, you're thinking, okay, this is off to the races. But then it holds in again, just holding in tight, not going anywhere. So do you buy more shares? Well, at that point, you don't want to buy any more shares because you don't know, is it going to start base building again? Is it going to dip below that 10-week line? You're really not up on the shares that much, especially given all the time that you've been sitting in this stock. So you're waiting to see, is this stock going to start with some more strength? So you sit back, you have to be patient. Being patient is a very difficult thing for many of us to do. But you want to be patient and wait. And as it starts getting strong, moving through the highs of the recent weeks with some volume coming in, you could be adding some shares. In this case, since you've been sitting with this for so long, you might add a little bit more shares than we did with the last one. So if you originally bought 1,000 shares out of that cup with handle, since it's been trading so nice, maybe add 300 or 400 shares instead of 200 or 300 shares. That really becomes a personal preference, and it also depends on your exposure to a sector. Something like the biotechs, they can become very volatile, especially with FDA news. So you don't want to have too much of your account piled into a bunch of biotechs, especially if they're going through some phase 2 or phase 3 trials that can really have a big impact on their stock, either up or down. You don't want to be overweighted there. But you can see, you add to it there, it's holding in there, and then within 2 weeks, the stock really starts moving and it's up to the $106 price range. So some patience really paid off, and you had a big move in a short period of time with Biogen. All right, last up is Chipotle Mexican Grill, CMG. And this is the tight area that happens not too long after some of its first bases. So you can see that it originally breaks out of its IPO base, moves up a little bit, and kind of runs into a wall up there at 67, and then backs away and forms a cup with handle that it tries to break out at $62, can't go anywhere, forms a tiny little cup with handle. And if you step back, that little cup with handle is really the handle formation of a larger cup with handle starting all the way back at 67, 77. So that's very ideal. It's something that we see in a lot of our models, and it moves up a little bit and it's holding in. And this almost looks like another handle. So the stock is under accumulation, but it just really can't get going. Let's work under the assumption that you bought it off of that tiny little cup with handle in the $60, $62 range. So you bought it there. It's pulling back in, and you've got to realize about half the stocks will pull back into their pivot area. So it pays to be patient. Try to hold on unless the stock is really doing something wrong. Give it a little bit of time. And if you did that with this one, it was able to just get that support at the 10-week line and just kind of inch up. And then you'll notice that it really holds in tight. This whole area is nice and tight. It's a sign of accumulation, but you're not adding to any shares, because if you bought it at 62, 63, you're really not up on it much, especially given the amount of time that we've been sitting with this. So we don't have a big gain, but we have a little gain, enough to sit. Then as it starts moving higher into new high ground, you can nibble on it and just buy a little bit of shares. If you bought 1,000 shares originally at 62 in that price range, maybe you're buying 100 or 200 shares here. You don't have a ton of conviction yet because it hasn't been a perfect chart, and you don't know if it's just going to go sideways or not. So you don't want to put too much capital in, but it's certainly worth adding a little bit more so you have a bigger position if it has a big move. And look, it did. It runs right up to $150, $160 within a number of months. So this was Chipotle Mexican Grill. And just keep in mind, it pays to pay attention when you're out shopping, going to restaurants. Look for the crowds, look for the hot new thing that everyone is talking about, because that would give you a leg up and you would be able to know what was going on with this stock early in its move.